Hi, it's Corey from Cambridge Money, part of the wider Money Group with mortgage and financial services firms based all around the UK. Today's video is all about mortgage payment holidays, and this has been in the press a lot recently. So as of the March 17th, the Chancellor announced that people would be able to take mortgage payment holidays due to the impacts of COVID-19 on their financial situation. Now, in the 2 weeks from the 26th of March to the 8th of April, the amount of requests for these mortgage payment holidays actually tripled, and at the moment 1 in 9 people with a mortgage have now taken a mortgage payment holiday. A mortgage payment holiday is the ability to defer your mortgage for a period of currently up to about 3 months. Now, what we used to see was a lot of lenders already offered payment holidays within their products, but if you ever took one of these holidays, then some lenders would actually report that as a missed payment to the credit reference agencies, which could impact your ability to get credit in the future. Now, what we have seen is that with the current payment holiday situation, that the lenders and the credit reference agencies such as Experian and Equifax have agreed that should you take a payment holiday, it would have no negative impact on your credit report. So what this does mean is that if you do have a mortgage and you've kept it up to date and you take one of these payment holidays, then the lender would continue to report your account as up to date. But something to bear in mind is that you are in arrears with your mortgage and you take the payment holiday, the lender will continue to report your account in arrears. But what this does mean is that they will not be reporting your account as any worse off as they were originally. So the big question, should you take a payment holiday? Now, the important thing to remember is that these payment holidays are not free money. You are not paying your mortgage, but what the lender will be doing in this time is that the interest element of your normal monthly repayment, they'll actually be adding on top of the loan. So your loan's getting bigger. Your mortgage term is now 3 months shorter. So what this is going to mean at the end of your mortgage term is that your monthly payments are going to increase. So if you can still afford to make these payments, then there really is no advantage to you taking these payments. Something to bear in mind is that we don't know how these lenders are going to approach this in future. As of right now, the lenders have to offer it. But at the end of the 3 months, once that lockdown is lifted, that may change, which means if you've already taken the payment holiday and you didn't need it, and there comes a time in future where you do need the payment holiday, there may be no guarantees that you actually get it. However, if you are really struggling with your monthly payments and it's causing you a lot of stress and you think it is the best thing for you, then the payment holidays are there to support you. And it's just working out and making sure that you're going to be comfortable with those payments in future. And now, as mentioned before, the interest element of your normal monthly payments is actually being added on top of the loan. So it is going to mean your monthly payments are going to increase. Now, the Money Supermarket website is a really useful calculator that you can actually put your details in. It's going to give you a good, accurate figure. But it's a bit of an idea for the ballpark average. So in the UK at the moment, based on the average mortgage, taking a payment holiday will add around £9 per month. So as a brief recap, we don't know what COVID-19 will do to affect the mortgage market going forward with lenders and their criteria. Who knows, we may see lenders say that if you've taken a mortgage payment holiday that you no longer fit their criteria to get a new mortgage from them. Now, that is very, very drastic, and I hope that lenders wouldn't go down this route. But the key out of all of this is that we don't know what they will do in the future with those that took a payment holiday. So if you don't need the payment holiday, it's not really advisable for you to take one until it comes to a time that you may actually need it. If it's come to that time where you do need a payment holiday, then look, it is there to support you and relieve that stress in already a very strange time. But what I would say, and very, very important, is do not just cancel your direct debit before talking to your mortgage lender, and talk to a mortgage advisor. Look, they'll be able to go through the potential costs in the future with you, and even a budget planning exercise to make sure that it is the right thing for you. My contact details at the end of this video, so if you do want to talk about anything that has come up in this video, please feel free to get in touch. But thank you very much for listening, and I'm Corey from Cambridge Money.